As an investor, I am often asked, Damian, should I buy gold now? Should I invest in gold? It is a common question, especially when the economy is not doing so well. People are scared about their future now, and as the effect of that fear, they buy gold, and the gold prices are going up. You can hear everywhere about the stock market crash, recession, lockdown of the economy. But I will start with some optimism because there are positives on the horizon. The initial fear seems to fade away. This chart suggests that at least some things might be getting back to normal. The number of Google searches for toilet roll appears to be declining. What about gold? Gold is something scarce and limited. But is it an investment? Is it a good idea to hold gold now? In this video, I will express my opinion on gold investing. Our ancestors had a problem. They were looking for a method of exchange that was easier to implement than a barter system. In a barter system, participants in a transaction directly exchange goods or services for other goods or services. The example of barter is the exchange of food and clothes. Prehistoric currency involved easily traded goods like animal skins or weapons. It was, however, not too convenient, so they looked for another medium of exchange. Metals seemed to be a good idea. Metals can be transformed into coins representing the nominal value of the metal used for its creation. You have to agree that it is much more convenient to carry a few coins than carrying weapons or animal skins. But what metal can be used for it? Examples of metals are aluminum, copper, iron, tin, gold, lead, silver, titanium, uranium, and zinc. Iron, lead, copper, and aluminum are prone to corrode over time, so its use as storage of value in terms of coins do not make too much sense. Another requirement for such metal is that it should be rare so that not everyone is producing coins. Platinum and palladium produce little corrosion, but are too rare to generate enough coins to circulate. The chosen metal should also be accessible enough so that a reasonable number of coins can be created for commerce. From an elemental perspective, gold is the most logical choice for a medium of exchange for goods and services. It does not corrode. Gold can be melted over a flame, making it easy to work with and stamp as a coin. It is rare, but there is enough of it for producing coins. All the gold in the world would form a cube of 20 meters on each side. Gold is also appealing to the eye. Do you know what is appealing to the eye too? When you smash the like button and subscribe to this YouTube channel. Okay, so now we have an understanding of why gold used to be a good store of value. Some nations still consider gold as a good store of wealth. Indians traditionally buy and hold gold. It is an especially important aspect of marriage ceremonies. No wedding in India is complete without gold. Owning precious metals is part of India's culture, but the fundamental reasons Indians buy gold and silver are different. India is a country with high inflation rates. The lowest inflation rate during the last 40 years was around 4%, with an average of approximately 7 to 8%. Storing money in Indian currency was not a good idea. Inflation in the United States is on a much lower level, the average from the last 30 years being around 2 to 3%. During the last 10 years, gold price in dollars went up by 51%. During the same time, the gold price measured in Indian rupees skyrocketed 162%. What we can take from it is that if you live in the country with loose monetary policy, storing your wealth in gold might be a good idea. But we have more assets to store our wealth in, right? Let's compare returns from gold investing with the stock market. Gold increased its price by around 50% during the last 10 years. And here is my point. The stock market outperformed the results achieved by this yellow metal. The S&P 500 index went up by 130%, and technology stocks represented by Nasdaq index went up by 233%. Let's think why the stock market is outperforming the price of gold. Stock market investing is buying productive assets. Gold is not a productive asset. When you buy gold, after 10 years, you still have the same 1 ounce of gold. Gold is not producing anything. Instead, it requires you to hide it, and also it adds a fear that someone will steal it from you. When you buy shares of a thriving company, that company can grow and be a much more valuable business. In the meantime, you can collect dividends. For example, 10 years ago, Alphabet, a company standing behind Google, had revenue of $23.6 billion. The revenue in 2019 was equal to $161 billion. And as the effect of it, its share price increased by 322%. That's what I'm talking about. You can own shares of a growing company, or you can own a coin of gold, which will still be just a coin in 10 years from now. Okay, but maybe you prefer to look at the longer horizon. Gold has gone up in value at 220% over the last 40 years. Over the same period, the S&P 500 index went up by 2,600%. So gold went up 3% annually versus around 9% for the S&P 500 index. And that is the period spanning through a few recessions and stock market crashes. I like what Warren Buffett said about gold. Gold gets dug out of the ground in Africa or someplace. Then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head. On the other hand, money invested in the stock market could grow exponentially. The analogy Buffett once used is choosing between 2 types of geese. If you had to pick one, would you want the goose that lays eggs or the goose that just sits there? There is an opinion that gold is a true inflation hedge. Let's look at the inflation-adjusted gold prices. In inflation-adjusted dollars, the scene does not look encouraging. The 1980 inflation-adjusted price of gold of over $2,000 went down during 20 years to the level of only $351, losing a whopping 85% of its inflation-adjusted value. It was not a very good time to hold your wealth in gold, and it proves it is not a good inflation hedge. Another point is that I prefer to invest in assets where there is no hype. And if everyone now thinks about gold, I would walk away from it. The hype usually means that that specific asset is already overpriced. I have been observing trendy bloggers and vloggers. Many of them advised buying gold since 2012. If you had listened to them, you would miss on huge gains on the stock market, plus you would still be in a negative area with your gold investment. Gold bugs like them make money on selling fear. If you follow someone, make sure that person is getting a good return from investments, not just sell beautiful stories about shiny gold. Gold can be a hedge against government. If you live in a country where people keep on losing faith in government and the official currency, owning gold may be a good idea. Argentinians who have gold and silver are sitting pretty comfy as their peso currency hyperinflates. But if they invested in the American tech companies, they would be now much better off than with their gold holding. I agree that gold can have some presence in the investment portfolio, especially for the people who are afraid of investing. But you need to remember that it is not a productive asset, so in the long term, it is wiser to invest in stocks. In the video, which I published on April 1st, I asked you to try to guess which statements about my investments are real and which are false. The sentence which received the majority of incorrect answers was about me buying gold. For some reasons, investors think that it was a good idea to buy gold. But do not share it with people who bought gold in 2011 and the gold price is still below the price they bought the yellow metal for 9 years ago. In the same time, the investment in the best companies could easily double your wealth even after the latest stock market crash. Although gold isn't a perfect inflation hedge in the short run, It is a very good crisis hedge. When paper can't be trusted, gold will always retain some value. If you are scared of holding your cash, you can consider buying some gold, but be aware that it will not multiply your wealth. But I hope this video showed you that investing in great companies is a much better idea. Holding productive assets is critical to building wealth. Hiding some precious items will not make you rich. Let me know in the comment section below, what are you planning to do with your investments? Is gold a part of your portfolio? If you enjoyed this video, make sure to subscribe and click the bell to receive a notification about a new video being published, or feel free to add me on Instagram, Stocks and Freedom. Thank you so much for watching, and until next time, happy investing!